Well, hello everybody, welcome back to another Forex market analysis session. My name is Alexander Nikitin. I'm a professional trader and the developer of pattern search software. And in today's video I will talk about the two trading opportunities, the Aussie CAD and the New Zealand CAD. One of them already hit the targets, but I will use it to explain my methods. And another one is a potential one, so I will be looking for a setup that is only getting ready, that is only setting up. Okay, first of all, let me explain the methods that I use. My approach is a purely rule-based approach, and I'm using the if-then syntax. If price does this, then I do that. If price does this, then I do that. Very simple. I also code some indicators to make the work a bit easier. For now I have an indicators to draw advanced and harmonic patterns. Also I have an indicator to calculate the edge, and some other indicators to show me the candlestick formations and some minor things as well. They are all needed for the whole system that I'm using, for the whole approach and the whole strategy. None of them is used separately. So today I'm going to show you the whole approach, the system in its whole. Okay, right now you can see the indicator that I call the edge calculator, or CTS, combined technical score. It shows me what I have on the chart. For example, if I have a trend, it gives me an edge when I go with the trend. If I have a moving average, it typically acts as support, and it also gives me an edge, and so on and so forth. I can calculate those edges, and my indicator will tell me if I have enough edge or I don't have enough edge. So this is the notifying button. Okay, let us start. You will see how easy it is to analyze the market, how easy it may be to analyze the market using this indicator instead of checklists when you draw something, write down something with your pen and pencil. Right, obviously we have a kind of uptrend here. We have the swing low to swing high, outside return, another swing high but don't violate, then outside return, then we violate. When I say violate, it means that we not only have a higher high but also higher close above the previous high. So you can see obviously we have higher close, and then we have outside return, another higher close. So this means that we have an uptrend. Another indication of that we have an uptrend is using the moving averages. Standard moving averages 50, 100 and 200. If 50 above 100 and above 200, then it means we have an uptrend, and vice versa. So if 50 is in the middle of them, then we'll most likely are in consolidation. Consolidation is not that bad. It typically brings multiple harmonic and advanced patterns, so it can be traded this way. Okay, we have a trend. I am making a decision to buy. Can we have a trend? I'm making a decision to buy. If anything fits my rules, I just press on one of these buttons. Next, what is next on this pair? This is said check the structure. Right now by default it is no structure, but check the structure. I was looking at the trade here. I saw this being a support level here, previously acting as a resistance. You see those spikes rejecting. Also the resistance level and kind of support level. And if we go back into history, we will find more and more evidence of this price to act as resistance support as well. Maybe a bit lower, it doesn't actually matter. Maybe this will be a bit more precise level placement. Okay, so obviously we have some structure level. My rules say that price should touch at least 3 times on the visible part of the chart. So look at this. It is touch number 1 that I'm looking at right now, the pullback. Just imagine we didn't have it this way. Yes, this is touch number 1 and rejection. This is touch number 2. Of course we need to use some approximation obviously we faced some support here, although price never touched that. But it can be calculated as touch number 2, touch number 3, touch number 4, touch number 5, touch number 6, and touch number 7. So enough, obviously enough. If this happens, I click this structure, that I have structure. So I have trend and structure. Remember, I was going to buy here. What else? I have trend lines. No line by default, but if I have something, I like to draw trend lines using my channel tool. You see, I am connecting the highs, and then I stretch this to connect the lows. Maybe here to initiate this as well. So just ignoring the spikes and placing it to a closing price of this. You can see it this way, acting to a close price. So you can see it also was in the bottom of the channel. It was touching the lower trend line. Have trend line? Yes, I have trend line. Also, what was it? We broke the moving average this of 50. You can see it was support, 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 then we broke them, and then we had a kind of ceiling, resistance, 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 and we came lower to another moving average that acted as support. Do I have moving average as support? Yes, I have moving average as support. Next, check the fibs. Checking fibs. Stretch our Fibonacci from the lowest low to the highest high. Well, not very much confluence here, but if we start from here, we can see the 382 level lining up with support moving average. Do we have Fibonacci's? Yes, we do have Fibonacci's. If we stretch our Fibonacci's to measure our last leg, we will see that this level was actually the 618 golden mean ratio coinciding with that. So 618 this way, maybe 382 here if we stretch them to. Well, obviously we have some Fibonacci level coinciding with this structure. Let me drop some for you to keep it in mind that we had some conflicts. Do we have a divergence? So the divergence is this: is if we are going for trend continuation, I'm looking for a hidden divergence. This is low, this is lower low, so this is low, this is lower low. No hidden divergence here was found. This stays unpressed. Do we have a candlestick formation? Yes, we do have a candlestick formation. But before I execute the trade using the candlestick formation, I want you to pay attention to this thing. Do we have a pattern here? And yes, we have a pattern here that should terminate a bit lower, but this is the situation when you may slightly adjust your entry, slightly adjust your original levels. Okay, I just deleted that. How can I move it back? Okay, you see that the cipher pattern termination is this 50% Fibonacci level. You see it here. If I'd place my limit order here, yes, it would never be triggered. So I decided to do it this way. You can see that in my once it is loading, I decided to do it this way. We have a powerful confluence, and many times it triggers earlier than the entry of the pattern. So if I have a candlestick pattern, and I actually had one, you see the indicator shows me a hammer, a piercing pattern, and then another hammer at this level touching the moving average. Then I will enter. So the cipher only gives me an edge, but I'm not executing that trade according to the cipher pattern strategy. So I had an edge, additional confirmation, but not trading the cipher itself. You may understand the difference. if it makes sense. Using the strategy to get involved, using the strategy to increase your edge, using some other strategy to do some other things. Okay, you see, if I disable pattern, it turns into not enough edge. If I turn the pattern, it says you have enough edge, set your trade. And let's go to this trading view when I posted this idea. And you see it was channeling, MACD, moving averages, 50% retracement of this, Fibonacci, and blah blah blah, cipher price. And I have written there in the description when price shows this type of confluence, it typically starts to move a bit earlier than the original entry. So I will look at the candlestick formation in this zone. If it appears, I will place my stops not beyond X, but beyond the lows of the candlestick formation. So it actually, what happened? Price hit this level, this confluence level, yes, and reversed. Let me zoom it in so you can see what actually happened. It hit this level and reversed. Let's go to my MetaTrader. Hit this level, a candlestick formation, stops just beyond that candlestick. And in this trades, I typically use candlestick formation was here. Even if I disable the pattern here, I still have enough for setting a trade. So the pattern is arbitrary. It is a good confirmation, but it's not the only source of information. It is arbitrary. So I just mark that I have the pattern. Okay, so how I do enter them? Those candlestick formation below here, I place my stop loss. Let's say, don't remember, 13 or 14 pips was my risk. I think 13, just below the stop and below the moving average, 13 or something. And my reward is twice larger. That's it. So I simply hit the take profit. 30 is twice larger than 15, but I remember it was 13 or something. 13 pips stop loss, 26 pip take profit. So just hit the take profit. Will I enter the cipher if it goes lower? No, of course not. If it goes here, the cipher pattern's time has gone. It started earlier. Obviously, if it goes lower, it will need to break the lows. So maybe there is no need to enter long, but I will calculate my edge. I will calculate my odds, put the odds in my favor to see if I can do something. Okay, let's go to New Zealand Canadian opportunity. Right now we have nothing on that. Yes, nothing on that. Similarly, we have the uptrend. Yes, starting from this break of these highs, we have the first new structure high that is closing above, then we have a pullback. This is the second new structure high that is closing above, and then we have a neckline and a double top, because this second price fails closing above. It fails to close above the previous. Yes, that's why it is a top, it is a double top, and this is not a higher low. This is a neckline. Actually, this is not a higher low. It doesn't break the impulse starting point. The impulse starting point is here. Impulse ending point is here. So, and this is not an impulse. An impulse should break and close above. So we don't have the nearest starting point of an impulse is here. So we don't have a trend reversal. I mean this large trend reversal. Obviously, we have a smaller trend reversal due to fractal nature of markets, trends within trends within trends, and so on and so forth. Some swing legs are actually trends. Of course, we have that trending moment. Let us see the two opportunities. One of them is counter to this larger trend, but trend continuation to this smaller trend, and another will be trend following to this larger trend, and of course counter trend to this smaller trend. First of all, let's see if we can gather enough evidence to trade the smaller trend. We have a trend, yes, so we have an edge that the trend will continue. It is obvious. The trend is most likely to continue. Next, what is the potential reversal point where we can have this price to reverse? Where is the nearest structure? And the nearest structure is this. Look at here. Then we touch that, kind of false breakout, yes, and then if price goes here, it will be a nearest reversal structure. Of course, we could have it here, yes, price broke that. Now it is retesting the zone. Maybe I need to place it here, somewhere here, retesting the zone, but I dislike that because it's not very obvious. So the most obvious is this. So 1, 2, let's go a bit deeper to fit the price. 3 and 4 a bit lower. I'd place it here. Okay, to touch as many as possible. Oh no. This one will be okay. So acting as a shelf here, then acting here. Yes, this will be a structure level. No matter what, obviously it was touched more than 3 times. We have some structure. Do we have trend lines? Well, how do we draw trend lines? I prefer to draw channel. We have it this way. Sorry. We have it this way. Look how price is channeling from lower border to upper border, and again, now it seems to me that it reversed from this higher border, and it is approaching the moving average. Okay, we have line and we have moving average, but the structure in this case needs to be here. Let us see once again if it was a good structure. Yes, this one. 1, 2, you can see that. 1, 2. Not obviously touched here, but it was spiked here. 3 and 4. Okay, so the price is approaching here. I think that moving average will decline a bit more, and they will meet somewhere within this zone, somewhere within this level. Okay, another situation, another trend line analysis is that we have channels, yes, but also there are some middle lines of the channel. So I'll just copy this channel to have parallel line, and look at this middle line. I'll try to place it here. You see it acted as resistance, then it was broken, acted as support, broken, and now acted as resistance because it coincides with that. So this middle line, this symbolizes some middle line. So we can go here and then we retrace back at least to touch the middle line, at least some minimal targets. It may be useful to calculate the minimal targets. Okay, the price is moving to the upside. Line is selected. Fibonacci. Do we have some Fibonacci? Of course, we don't need this to calculate targets for now. I need to look at some extensions because first of all, sorry, we have to look at some retracements. Let's go here. What is this level? If we measure the initial leg, 618, exactly 618, wonderful. This is the Fibonacci level. And what if we measure the whole movement? It is 382. Again, coinciding with this Fibonacci, with this structure level, 382 to 618. And note that I just pulled it a bit lower. If it were higher, it wouldn't coincide. It would coincide with 50, and it wouldn't be that precise. Okay, we have some fibs, but still this evidence is not enough to trigger the trade. What else can we see? Divergence. Do we have divergence? This is a higher low, lower high. This is lower high, and we have high, lower high. No divergence. What is this? This low is lower, this is higher, this low is lower, and this is lower. Oh, this one is called the hidden divergence when you have it this way. This is high and high, this one is lower than this one. And here we have high and high, corresponding high and high. This one is higher, this one is lower. They are hidden. The hidden divergence is the trend continuation sign. It's not a trend reversal sign. Well, and we may use that as a continuation. Let us click on that hidden divergence and look at this. Set your trade, the indicator says. It says that the edge is enough to set your trade. What is enough? It means that you will have at least 60% probability if you place your trades based on some structure. The structure means the retest of these lows, if entering here with the stop loss of this 37 of risk, so the stop loss should be somewhere around 15 pips, 50 Fibonacci level, just above that. So something like this. Within this approach, we will have very great probabilities. Okay, this will act if it goes lower. If it goes first, it goes higher, and we may go lower with this, I don't know, at least to the middle of this channel. Yes, remember that, the middle line of channel, like this. Resistance, support, resistance, at least to this. We may face it here, but I conservatively take targets at this retest. I try to take targets. If my entry says that placing targets there, I won't have the risk to reward 1 versus 2. This means that risking 1 to generate 2. If I don't have that, I'm not extending my targets. I don't do it this way. I just wait for price to go deeper inside of my zone, and maybe it will give me a better entry, so I can have a smaller stop loss and larger take profit to fit my rules of 1 to 2 placement. Okay, and let us talk about another opportunity that is actually a trend following opportunity, the large trend following opportunity. For now, I will delete this stuff. I know that if I have a candlestick formation here, it will be another confirmation of that. The candlestick formation will give me additional edge, so the candlestick is the only thing that I'm waiting here for to initiate short, and I will place my stop just above the high of the candlestick. Okay, so let me disable them back. You can see them. We have an uptrend, obviously. Good. Do we have a structure level? Yes, we do have a structure level, and the level I'm looking at is this. The level I'm looking at is this. Let me delete this line. Why I am looking at this level? Why not here? This may seem a bit obvious, but I'm looking at this because this is the only level that I see on my visible part of the chart that touches my line 3 times. 1, 2, 3. It should touch 3 times. That's why I'm looking at this level, not higher. Next, what I do next? I do have structure lines. Do I have trend lines? Let us see. If I measure this trend line this way, well, price will need to break that trend line to go to my level, yes? So this means that the trend line will be invalidated, and I wouldn't have it as an edge. It would rather indicate to a shorting position than to a bullish position, yes? So then let me do this analysis. Maybe if I draw the trend line this way, it will be better. Why drawing the trend line this way is better? First of all, right now it is acting as a support. You see that? Coincided with moving average, acting as support. 1, 2, 3. So I could buy it here and then sell it here, but well, obviously I was late with my analysis. Doing it right now, it means that I am only to sell it. But we don't have structure here. don't have enough structure, so maybe it wouldn't be enough to initiate the trade. Okay, I don't look at that opportunity, bullish opportunity at that level. Here at the trend line 1, 2, 3, confirmed trend line, and it coincides with the structure level. Perfect. Do we have moving average? No, in this case we won't have any moving average, so they all will be broken, and we will meet a kind of consolidation phase because this medium will be trading inside of these two. This small moving average will be trading in the middle of those two. Do we have Fibonacci's? Okay, let me delete this. Delete this Fibonacci. And let me stretch them from low to the high. What do we have here? Not very much. Not very much. Trade 2, but already running. 50%. Not exactly. Maybe this. If I stretch them from this low, almost 618. Well, no Fibonacci. No Fibonacci. Let's say no coinciding exactly. If compared to this level, yes, you saw them Fibonacci in line very well. Here we don't have Fibonacci's lining up very well. But if we are looking for something, we may look at extension. The extension, Fibonacci extension, is a good place for taking targets. So many traders would take targets at 1618 extension or somewhere here. Look at this, 1618. Let me measure that level and place it here, 1618. Let me make it which? Let it be green. Okay, and now let me go and measure the fibs once again. Now it coincides with 618. Okay, perfect. Perfect. Now we have fibs. So we have a level of structure coinciding with trend line, and we have a level of structure as well. This low is even better. 1, 2, 3, 4, 5, 6, 7. The lower level is even better. Better. Okay, maybe the lower level is the one that I am to look at. Then the trend line will be broken. Okay, I won't have line, but I do have fibs. Okay, next thing, what I'm looking at is this low. This one is a lower low. Right now we have a hidden divergence that calls for a continuation, trend continuation, because this one is this. And this is high, this is lower high. Okay, no divergence. For now, nothing here. Next, what I am looking at, the trend line is not needed. I'm not looking at this. Oh, close it. This. But look at the channel coinciding, the lower border coincide that. You see, we may face some buying pressure at this level, some buying pressure. So we have a trend line being this. Next, what I want to show you as well. Candlestick formation, too early to tell about some candlestick formation. Overbought, oversold conditions, too early to tell about them. If price goes here, we have pretty large distance here, and it should be a movement of this kind, because otherwise it won't be oversold. ABCD. Do we have harmonic movement when one leg equals to another? AB leg equals to CD leg. By the way, if you don't have one leg equal to another within the harmonic pattern, you don't have a harmonic pattern. This is the lesson that I was taught by Scott Carney. Talking to him, Scott Carney was explaining me why cipher is not harmonic, because it doesn't meet the harmonic pattern rules. So if you should distinguish between the harmonic patterns and advanced patterns, they are different. advanced patterns aren't harmonic. Okay, going within here, let me draw it this way. This will be my reversal rectangle. We all know that those support and resistance levels, they aren't actually, let it be green, they aren't actually the precise lines, but rather reversal areas. Here's my reversal area, and I can put my line back, my initial line back, so we will have that area. Now it looks very cool. We don't need this rectangle anymore because I have two lines. Now it looks very cool. Next, guys, what I wanted to say next, we have a harmonic movement that terminates exactly at that same level, and this harmonic movement is 161 extension of that, and it also coincides with 61 extension of this, and we have that. By itself, we already have permission to set the trade. Set the trade to buy an opportunity. So if price goes lower, we have this buying opportunity, pretty good buying opportunity, but that's not all. Another confirmation for the buying opportunity is the advanced pattern. And let me draw the advanced pattern using my monster pattern search, simply uniting the C and X point. So the advanced pattern looks this way. It is yellow. Yellow means a bad pattern. So let me make it background maybe this way. And let me make it this way. So you can see that this is a bad pattern, and the termination coincides with the lower border of this channel. Maybe we will see the price moving this way, then it moves kind of alongside this, and then it moves kind of this way, and here we may see as well a falling wedge or whatever pattern. If we have that pattern, if we have some candlestick formation, you need to click it here. Another confirmation of bullish potential, and this will only be valid, this will only be true if price goes here, because it may go higher and higher, and we just lose our bearish opportunity. Yes, we lose money on our bearish opportunity and never have a bullish one. Who are those we? I mean I lose, because I think you won't follow my advice and think with your own head. I am to say the disclaimer, my analysis is not the recommendation to buy and sell. This is the approach that I had back tested and that I forward tested, and that generates and works for me, and there is no absolutely guarantee that it will work for you or not. So you are to backtest that, you are to practice. All the incomes that I have typical for me, but it's not necessarily that you will have the same. Well, that's it about the analysis. Right now we are very close. We only need a candlestick formation for a selling opportunity. We have enough evidence, enough edge to enter short. We need a candlestick formation here, and we'll need also to touch this moving average. If it touches and rejects, that will be awesome. And when price will hit this lower level, there will be a buying opportunity. Can I place a limit order right now here? Of course, yes. I can place a limit order right now here with patterns. Patterns are accurate by themselves. You don't need very many confirmation. Look at this. You have a pattern, you have an ABCD, and what you need? You only need structure, maybe not enough, maybe structure, maybe simple trend line, something like that. Or maybe you don't have any ABCD. In most cases you have ABCD within that pattern, because the structure of the pattern presupposes that you have something AB equals CD. Maybe you have some fib confluence, line confluence, and some structure, and that 3 will be enough. If you have a pattern, it will tell you set your trade. See this? So with pattern you don't need that many confluence, but today we have almost everything. Only looking for a pattern, candlestick pattern to appear to get another one, almost at the maximum amount. So a very powerful opportunity. I can place a limit order, but where I should place my stop, of course, in this way I cannot place the stop just below the previous candle's low. It's not that good. I am to place that below X, somewhere here, 10 pips below X, maybe 5 pips below X, maybe 1 ATR below X, judging by the risk to reward. So I am to place it below X, and that will that means a pretty good amount of risk, 20 pips or something. If compared to target, the target is conventional. The risk is 29 and the target is 53. So pretty good, but not 1 versus 2. I will wait for price to give me a candlestick pattern, and I will place my stop just below the low of candlestick pattern, and I will measure my target being twice larger than the risk. Well, that's it about the trading opportunity. And now let me talk about the announcement that I told about in the beginning of this video. So this announcement is as follows. We are starting the winter. December started. Today it is the 1st of December, and I have some good news for you. First of all, I initiate the end of year sale off. So I will give you the 25% discount to my software, for my software, be it monster pattern search, manual HPS, or automatic HPS. You will be given that with a 25% discount. Next, as usual, the pattern trade assistant. This is the trade that places. This is the expert advisor that places trades according to my drawings, especially the horizontal line and Fibonacci's. It calculates the amount of risk, it calculates the stop distance, it does everything, so you don't need to do that manually. It goes as a bonus. So if you are my customer that gets monster pattern search or automatic HPS or manual HPS, you will get that as a bonus. And guys, my Christmas present for you is this indicator, this CTS calculator, this edge calculator, this advantage calculator. It acts as, you see, it acts as a checklist. You have this, and this, and it also calculates the scores. Every one of them is assigned some scores to tell you if the trade has enough edge or not, and that will be a present for you if you buy my software within this period of 1st December towards the 1st of January. On the 1st of January, this offer will expire. So, and I will add that on my website. So don't worry if you don't have enough time to buy it during this period. But you can find, you can get it later, but it will be shareware. But it will be available on my website, but it will be shareware. This powerful indicator that calculates your edge. Well, that's it. These are all good news that we have for today. All good trading opportunities as well. Hope you enjoyed this video. Hope you found something useful for you. Hope you got some lesson on how you should arrange your trading, how you should analyze the market. If that is the reason, if you found that useful, then please give me your thumbs ups, click that button, subscribe to show my next episodes. Guys, I'm not always promoting my software, not in every video. In my videos I am typically trying to show you some aspects of technical analysis and psychology of trading. My previous video was about the probability thinking, and it was awesome. Simply we just start that sailing period of end of year. That's why I just mentioned my software in this context. So you may subscribe that, and you won't be always spammed with this buy my software stuff. You will most likely be given quality stuff. And until then, good luck, good trading. Hope to see you soon.